It's the changing of the guard. On the 8th of September, Queen Elizabeth II passed away. And we're currently seeing the rise of King Charles III. But all these events all the way in London, there's some lessons that we can take from there. And today, on this episode, we're going to talk about 3 financial lessons that we can learn from the passing of Queen Elizabeth II. Hi, my name is Yolanda. I'm a wealth advisor, and on this platform, I give you easy, actionable tips, content, and strategies that you can use to manage money well, to live abundantly, and build generational wealth. So, obviously, sad time for the people of the United Kingdom with the passing away of their queen, and a lot of things are happening over in London right now or in Scotland. The queen's body is moving from to the various areas. In fact, there's a whole plan in place. And there's some lessons that we can take from here, from the passing of Queen Elizabeth. And the first one is to plan. Well before her passing, the queen knew where her assets were going. A lot of the queen's assets, her personal assets, and also some of the public assets, some are held in trust, some on a personal capacity. But the bottom line is she had a plan as to what is going to whom. Still waiting for the reading of that will and how things are going to pass. But the main thing here, the key takeaway here is the queen had a plan. She had her various trusts in place. She had a will in place for her personal possessions. So you need to do the same. Death is guaranteed. We just don't know when, we don't know where, we don't know how, but you can't escape death. Best thing that you can do is plan for it. And at every life stage, you got to come up with a new plan. For example, if you are a person with young children, you need one plan. And as you move on to a different life stage, as those children reach 18 or reach financial independence, you need a new plan on how you're going to pass those assets over. Okay, so wherever you are in your life stage right now, get a plan together. And you may be thinking, you don't have nothing to your name. You're still a student. You're still buying your first property. You still need a will, because in South Africa, in your will, you need to state if you were on a ventilator, do you want your family to do everything possible to keep you alive? Do you want somebody to take the decisions to switch off that ventilator? Okay, those are the kinds of things that you need to put in your will. You'll also, in your will, you'll state whether you want your organs to be donated. Okay, so don't think that you got to have a vast amount of assets to get a will in place. Whatever life stage you are in now, it's a nice exercise to go through. So as you go about accumulating wealth, you're familiar with the process, and you're constantly learning and you're constantly doing research. So as your portfolio expands, you are updating this will and your trust and all of that. Okay, so the key thing is plan, particularly on how you want your assets to go when you pass. Secondly, you got to know and you got to plan for the death taxes. Now, in the United Kingdom, the Queen was able to get away from the various inheritance taxes. I think the inheritance tax in the UK is around 40%. She will not be paying that, or the recipients also will not be paying that on her vast wealth that she's accumulated over her lifetime. That's not the same for you and I. Okay, in South Africa, we have a mountain of death taxes. Okay, I'm saying it like that because it's not actually called a death tax. There's a bunch of fees and levies and all these nitty-gritties that come up when an estate is wound up. Things like an executor fee. In South Africa, an executor can charge you a maximum of 3.5% of your estate value plus VAT. And that can come up to quite a significant sum, especially if you haven't planned to finance that from your asset portfolio. So if you have an estate, maybe it's worth 3 million or so, you can easily pay up to 120,000 Rand in executor fees for 3 million Rand estate. All right, so having a sizable estate is good and well while you're alive and planning for it, but realize that when it comes to building generational wealth, and that's one of the things that I focus on this platform, is to pass that off in the most seamless way, in the most tax efficient way. And executive fees, I mean, it's not a tax, but for me, I see it as a tax because I don't want to be paying those fees, but that executor is providing me with a service. Depending on who your executor is, you have that ability to negotiate. Okay, so you can negotiate it. The option that I've chosen personally is all of the debt taxes I have to pay. I have one bit of insurance for that will cover all of it. Okay, it's a nice, very flexible insurance. Call it an estate assurance. that whatever the value is, whether I pass away tomorrow or 10 years from now, I have this one insurance that will cover whatever the value of all of the various debt taxes that I have to pay. Then there's conveyancing fees. If you own property, all right, and you leave this property to your child, your brother, your sister, a sibling, that property, that title needs to be transferred to the new owner. And whenever that transfer happens, a conveyancing fee is charged because it's only an attorney that can go through that transfer process for you. If you have a property of 1.85 million, you can easily attract a conveyancing fee of around 30,000 for that property. So the conveyancing fees are fairly regulated. There's a table that comes out every year or every couple of years, I'm not too sure, but that's how the fee goes. So obviously if you hold multiple properties, each one of those have to be transferred, and this is where a trust comes into place. Obviously that's part of the estate planning process, where if you're holding things in a trust, now a trust can't die. So if you die, no conveyancing fees. Okay, so it's very important to sit with a financial planner to try and work out these nitty-gritties of how things are going to go. Also, even before you purchase, it's wise to sit down with a financial advisor to see which is the best entity you should be purchasing in terms of one, taxation, in terms of two, estate planning as well. Then there's estate duties. In South Africa, there's a bunch of deductions, and each individual has sort of a deduction of 3.5 million. Okay, so if you have an estate of 5 million, that first 3.5 million will be subtracted from your 5 million estate. There's a couple of other deductions in there as well, like funeral expenses, for example, will be deducted, and the balance of that will be taxed at 20%. The 20% is for everything at 20 million or less, and once you reach over 20 million, you're on a different estate tax bracket, which is obviously more. There is a rollover that occurs if you are married. Okay, so as you can see, it's vitally important. There's a lot of nitty-gritties involved. If you're married, the surviving spouse gets that rollover in terms of that exemption. The third lesson that we can learn from Queen Elizabeth's passing is immediate expense benefits. Now, the whole funeral process, those expenses are covered for, and it's coming up to millions and millions of pounds in the United Kingdom, which they have provided for. And the lesson we can take away here is we need to provide for our funeral expenses before we pass. Again, death is guaranteed. We just don't know when, where, and how it's going to happen. So plan for that. Funeral cover is a very popular solution for that in South Africa. I'm not sure why that is, because whenever I look at funeral cover, it's outrageously expensive compared to life insurance. If you are a holder of premium life insurance in South Africa, you have something called an immediate expense benefit. You got to go and check the nitty-gritties of your policy wording to see that this is there. But most of the modern policies that you've taken in the last 10 years or so should have that immediate expense benefit. How that works is when you pass and your documents are processed with that insurance company, within 48 hours, they will release an amount, sometimes up to 5 to 10% of that policy value. Some companies have a cap of around 50,000 Rand, which they will pay you within 48 hours. And that's an amount that you can use for funeral expenses. Well, not you, your surviving spouse or children. So instead of you taking an additional funeral cover, if you have this already, it's something that's built in. Okay, so it's important to every year to you and your advisor need to be reviewing all of this. Okay, there shouldn't be any duplicates of cover unless you have affordability and you want that kind of cover. Okay, but when you're crunching down, you're really budgeting. Look for these overlaps on where you can get the most bang for your buck. Another thing that you have to consider as well, especially if you're the breadwinner of your family, is the immediate expenses of your family. And after that first week or two of mourning, it's back to a new life, and it's a new life without you and how they're going to adjust. And if you're a breadwinner and your income is not coming in and your estate is busy being wound up, what will your family survive on? Things like bread, milk, lights, and water. How will your family survive? Because you know when you pass away, everything's locked, okay? And then the estate planning process or the estate winding up process begins. So how are your family going to get cash? That is something that you need to consider. For me personally, built into my estate planning cover, I have 6 months of expenses taken care of for my family. So you have a choice, 10,000, 15,000, 20,000 that you can have to come into the household for while the estate is being wound up. Before everything is paid out, the lights can stay on, basics can get done while my estate is being wound up. Now, if you want something like this, if you want to go through this entire estate planning process, reach out. I'll be happy to help you set something up. Go through thorough estate planning, you can also go to my website, and on the front page you're going to get a free estate planning guide in which you can download. So go to my website. It's www.financiallyfabulousfemales.com, and click on that link for a free estate planning tool, and you can get a step-by-step guide on how you need to go about estate planning if you want to do it by yourself. But if you want somebody to hold your hand through this entire process, give you the lowdown, all of the numbers, all of the death taxes, how much you should set aside just for those death taxes, reach out. Okay, on all social media, Instagram, Facebook, LinkedIn, and also my website, and also click the link where you're watching this video, and you can book an appointment with me, and we can chat one-on-one on how we can plan for the passing of your estate.